My name is Keith Priddy, and I'm the President and CEO at Northwood University. And it's my privilege to welcome you to this first Economics in Action program that is presented by MCTV, Northwood University, and the Robert and Janice McNair Center for the Advancement of Free Enterprise and Entrepreneurship. Northwood University has been blessed to have the philanthropic support of Mr. and Mrs. McNair, and it is through their efforts that our center was created. This center will, beginning today, bring you each and every month new economic information on economics in action and kind of the economic update that Dr. Nash has been so wonderfully producing for the media over the last decade. You'll also hear from some of our students and faculty and staff and entrepreneurs in this region and from around our country. So sit back and enjoy the program. We're glad you could join us.
Welcome to the debut of Northwood University's McNair Center for the Advancement of Free Enterprise and Entrepreneurship Economics in Action program in conjunction with Midland Community Television. My name is Ralph E. Wirtz. I am the retired managing editor of the Midland Daily News and a former member of the Hearst newspaper editorial board. I am your host today along with Dr. Timothy G. Nash. Welcome. Senior Vice President of Northwood University and Director of the McNair Center, and Mr. Josh Weckesser. Welcome, Josh. A junior economics major and McNair student scholar here at Northwood, who will be introducing our inaugural Entrepreneur of the Month. Northwood's McNair Center is a world-class university research center dedicated to the elevation and knowledge on the workings of free market economics and the entrepreneurial process. Today's program will feature economic data from McNair Center's monthly economic outlook presented by Dr. Nash, as well as a short presentation of our Entrepreneur of the Month. One can access the monthly economic outlook or our Entrepreneur of the Month by going to Northwood University's McNair Center website, while the economic outlook is also published each month by the Midland Daily News. So Tim, start telling us about the 2018 economics in the U.S. How's that going generally?
Well, I'll tell you, Ralph, the U.S. economy is doing very, very well, especially relative to the last decade. In fact, Warren Buffett recently said that he thought that as you looked at the U.S. economy, it was doing very well. We're in about the sixth inning, and our sluggers are coming to bat. Our best hitters are coming to bat. And I think he was basically looking at what's happened in the U.S. economy in the first half of the year. We're not quite there. We're near the end of June.
Correct.
But the data is out for the first quarter, the first 3 months of 2018. And, you know, it's borderline, I won't say spectacular, but it's very impressive. If you look at the first quarter and you take a look at one of the key indicators for our economy, and Josh looks at this as a student on a regular basis, is consumer confidence. And that means that we're looking at how confident are consumers in buying goods and services, investing, buying homes, automobiles, etc. And it was up 5.4% in the first quarter. And it's at an 18-year high if you look at the month of February. So consumer confidence is so important. And probably the last point to make with our audience is that 70% of U.S. GDP comes from the consumer. So having a very strong consumer confidence number is extremely important for the U.S. economy.
How is that relative to, let's say, first quarter of last year?
Well, if you look at last year, it's up rather impressively. It's up by about in terms of consumer confidence, probably 5%, versus a year ago. If you look at gross domestic product for the United States, we've had an impressive first quarter at 2.3%. Not as strong as some economists thought, but still an impressive quarter. Mm-hmm. And if you look at it from 2009 to 2016, U.S. GDP grew at 1.9%. And what is also something that we ought to be optimistic about is that the Atlanta Federal Reserve Bank, which does the Atlanta Now forecast for the Federal Reserve or for GDP, the Atlanta Fed is calling for 4.8% growth in the second quarter, which would be growth we haven't seen in the U.S. economy for a quarter in a long, long time. So that's a very strong analysis for us.
What are some of the key indicators telling us about the economy so far?
Well, if you look at it, Ralph, probably the most impressive piece of data on the U.S. economy right now is unemployment. The unemployment rate for the first quarter of 2018 is 4.1%. And that's well below full employment, which means our economy is firing on all cylinders as it relates to employment. That figure is down from a year ago when in the first quarter of 2017 it was 4.5% unemployment. And if you look at the latest unemployment figure, which would be May of 2018, unemployment for May of 2018 dropped to 3.8%. I mean, we haven't seen that figure in nearly 30 years. So a level that low is pointing to very strong figures for the U.S. economy. And the thing that I think is really most important is we have 156 million Americans working. It's the highest level of working Americans ever. And what's probably most important when you look at the work we do at the McNair Center, we're always trying to study and produce more entrepreneurs. 90 million of those people, 90 million of the 156 million employed in the United States today work for businesses of 200 employees or less. And so the entrepreneurial process, the risk takers, the new business creators are working like never before to help grow the U.S. economy.
Okay. Speak to us a little bit about the stock and the housing markets.
Well, it's interesting. If you look at stock, you look at housing, and you look just a little bit at job growth. Job growth has been very impressive for the U.S. economy, and I think it speaks to what we'll lean into with regard to the stock market and job growth. But if you think about jobs today, the U.S. economy again has 156 million people working. Our job growth, when you look at the end of March, it was the 90th consecutive month that we've created jobs in the United States. We've averaged 200,000 new jobs a month for the first quarter, and we've continued that into April and May of 2018. So job growth has been very strong. And now, to your point about wealth and looking at net worth, in the first quarter of 2018, net worth of all the households in the United States increased by $489 billion, or 1.7%. And that was when you're looking at the some of the data and some of the points to note. What you see is that the wealth has been so strong that U.S. household net worth is now over $100 trillion, and housing is now $28.8 trillion. So American households, rich and poor, large and small, the value of the household, their stocks, their savings accounts, their checking accounts is $100 trillion, and of that, homes are worth $28.8 trillion, which means that stock portfolios in the United States are worth about $68.8 trillion. We'll take a look at that in just a minute. But the thing that I think is really strong about the United States is that almost 65% of all Americans own a home. 64.2% of Americans live in households owned by the family or the individual. And that's up from 63.8% in 2015. And so housing has been a real bright part of our increase in wealth and our increase in the ability for Americans to prosper and to grow their families.
Okay. What are your concerns about the economy?
Well, it's interesting. There aren't a lot of concerns as it relates to growth, as it relates to job creation, but there are concerns about whether the stock market's going to continue to grow. And as you look at the wealth portfolio in the United States, the one thing that did happen in the first quarter was that the stock market began to decline. And so for the first time in a long time, we had a negative quarter for the stock market, and U.S. Portfolios lost $406 billion worth of value. And so it's nothing to be alarmed at right now, but there is a little concern over the fact that the stock market has had some edginess to it, has looked at breaking back up above 26,000 on the Dow Jones Industrial Average. It's a concern that I think emanates from the potential for a trade war. There's a lot of concern over whether the president's making the right decisions with regard to trade. And so as you look at it, right now the current wealth of the United States in stocks, savings accounts, checking accounts is $68.2 trillion. It's down a little bit, but still very, very impressive and at an all-time historic high.
Okay. You mentioned the trade problem or the trade situation. Do you have any comment on whether, how that's going to affect the economy?
Well, if you look at our monthly economic outlook, you mentioned it. It's 1,000 words. It's something that you can get, as Ralph noted, by going to our website, by looking at the Midland Daily News once a month, or if you contact us through our website. Ralph will mention it again at the end. But you can get the monthly outlook electronically, and in there we go into detail on the trade deficit and the whole issue of whether or not we're doing the right thing with trade. Trade's a real complex issue, and the United States, for the vast majority of the history of the United States, has had a trade deficit. You buy three things: you buy goods, you buy services, and you buy assets. Goods is the trade deficit, but we forget that we trade in services and we trade in stocks, bonds. So we trade in assets as well. And it's a little simplified to just look at trade. And then if you look at a country like Japan, people complain about the U.S. trade deficit with Japan. Japan is a very, very, very successful economy, but the population of Japan is only 40% of that of the United States. Their income in U.S. dollars is only 91% of the United States. So it's kind of difficult to say the average Chinese or Japanese person is going to buy 2.5 times as much from the U.S. as the U.S. would buy from Japan per person on an income that's only 91% of the United States. So there's a lot more complexity to it, and I just hope that cooler heads prevail instead of a trade war in the next 3 to 6 months. I think we're going to see a lot of this stuff resolved. The only other big concern that we have is, quite frankly, our national debt. And if you look at the U.S. national debt, stands at stood at $20.8 trillion at the end of the first quarter. And it's difficult because the one thing that has been happening under President Trump, that happened under President Obama, that the president campaigned against, was increasing the U.S. debt. And for the first quarter of 2018, the U.S. national debt increased by $573 billion, or 2.8%. We need to get our national debt under control. And our opinion is that the national debt is not due to a revenue problem, it's due to a government spending problem. Government needs to begin to look carefully at what it spends money on and do it more efficiently.
Yep. Do you have any strategies for doing that? Are there big areas that you need to pick out?
Well, I think in general, when you look at what does a corporation like Dow DuPont here in Midland or Northwood University, if you deal with a difficult time, a difficult economy, generally one of the easiest things you can do is look at making cuts across the board, making average cuts across the board. I read an article not too long ago that said if you reduce government spending by 1% a year for 3 years, you could retire the national debt in 10 years and then begin to develop a surplus. And just do that for 3 years and then continue on a normal trajectory. So there are a lot of different ways to look at how you finance the national debt. But one thing is for sure, the national debt is growing. It's growing at a pace that's unsustainable over the long term. Interest rates are now increasing, so we can't finance the national debt at the lower interest rates that we've enjoyed now for more than a decade. And last but not least, if you look at every man, woman, and child, right now the national debt at the end of the first quarter of 2018 was $64,000 per man, woman, and child. And so when you think about it, if you're a family of 4, mom, dad, and 2 kids, your national debt, your share of the United States national debt is over $250,000 per a 4-person household. And that's just something that we need to make certain that we correct for the future.
Any starting points on that?
Well, again, I would simply say that one of the things that we need to do is have a discussion as to the realization of the debt. I'm not sure Americans in general know, in simple terms, like what is it per person? What would your share be? Or what would a share for a family be? And I think the starting point is realization. And when you look at it, state governments, 49 out of 50 states have a balanced budget amendment. Why can't the United States government have something like that, is how I would note it.
Okay.
And so, you know, in concluding, I would simply just say, Ralph, that as you look at the U.S. economy, the positive signs are the tax cuts have done quite well for the economy. It's been a reason for the economy doing well. We would have preferred a fair tax approach, but the president's tax package was pretty good considering all the difficulties in getting it passed. The regulatory restructuring and reform has been very positive for the U.S. economy. You know, our concerns or our negatives in general are trade policy and the national debt. But overall, a great first quarter and a strong-looking second quarter of 2018 for the U.S. economy.
Very good. Thank you, Dr. Nash. Josh, who is our inaugural Entrepreneur of the Month, and how did he become so successful?
Well, Ralph, this month's Entrepreneur of the Month is actually Robert C. McNair. And Robert McNair is a very successful entrepreneur, and also he's the current owner of the Houston Texans football team. He became really successful through business and through utilizing American capitalism and achieving the American dream. Mr. McNair came from pretty humble beginnings. He didn't have a lot of wealth as a young man. His parents moved around from state to state to find jobs that could support their family, and Mr. McNair actually got into business following graduating from college from the University of South Carolina. His first company that he became involved in was an automotive leasing company in Texas. And soon after starting that business, he realized that where the economy was going and where money could be made at a pretty good rate was in the energy industry. And so he moved to New Jersey and actually started what became Cogen Technologies, which is a cogenerator. And in about 10 years, Mr. McNair had actually built Cogen Tech to be the largest privately owned cogenerator in the world. So that was a pretty outstanding growth in just 10 years to become the largest company to do that. And in 1999, he sold Cogen to Enron, the famous energy company, for $1.4 billion.
So that's where his seed money came from for all his other projects. What makes him so unique? I mean, what is it about him that he can take and build such a successful company?
Well, Mr. McNair actually came, like I said, from humble beginnings. Didn't have a lot of money from when he started off, but he was able to focus on the American dream. He was able to realize that by working hard, by utilizing all your resources, that he could become very successful. And he's actually a devout Christian, and he had a passion for giving back. And so when he was able to work hard and make some money, he made sure to give back to people. And I think it's really awesome that he's our Entrepreneur of the Month for the McNair Center here at Northwood University, because one of our creeds is go mad and making a difference. And that was a huge passion of Bob McNair, was making a difference. Him and his wife Janice have actually given over $200 million in scholarships to high schoolers going into college all across the country. So I think he's a very unique person just because he didn't come from much, but he was able to work hard to make a lot of money, to use his back and his brain to make the money that he had and invested that. Another couple things that him and his wife Janice did is they started Stonerside Stables in Kentucky. It's a 2,000-acre horse farm, and one of the horses at Stonerside, Conjury, actually finished third in the Kentucky Derby in 2003. And like I said, he's the current owner of the NFL team, the Houston Texans, and he brought that team to Houston. He was able to invest almost $1 billion of his own money in order to bring that team to Houston and give Houston a NFL team.
Okay. How did the McNair family get with Northwood to build that center, the McNair Center, and what was the relationship there?
Well, actually, Bob McNair met Dr. Nash at a conference down in Texas, and Dr. Nash can tell you all about how he met Mr. McNair.
Yeah, Bob McNair came to Northwood, Ralph, through a bit of a circuitous route. We do our annual Freedom Seminar, and an older gentleman named Rollins Story, who held the original patent with Houston Power and Gas for the gas barbecue grill. Rollins Story, he called up and wanted to be a guest at our seminar. Came up, was a great guy. We comped him because he was just starting this group called the Free Enterprise Institute in Houston, Texas, and he started a program for high school teachers the next year and asked myself and Larry Reed if we would come down and speak, and Bob was the chairman of the board of the Free Enterprise Institute that helped educate high school teachers on free enterprise as well as high school students, and that's how we got to know Bob. And he's just been a wonderful human being. As Josh has noted, he and Janice have given probably close to $1 billion. They've given over $200 billion to MD Anderson while creating jobs and businesses. And I remember being on the Frank Beckman show with Bob, and he said something that stuck with me ever since. He said, the greatest gift that a human being can give another human being is a job. And Josh and I were talking about that this week, that when you think of what Bob and Janice have done, they've given hundreds of millions of dollars to tens of charities. They have created literally tens of thousands of jobs, and the world is just a far better place for the McNairs having been there, and I'm just waiting to see what happens in the next decade of their lives.
So what made you want to become a McNair Scholar?
My love for economics, entrepreneurship, and free enterprise, it just fit hand in hand with the creed of the McNair Center at Northwood University. And I met Dr. Nash through being a student at Northwood and working in the economics department. And so it just became kind of a match made in heaven with the McNair Center and its creed and what my values and my interest in economics.
Okay. Mm-hmm. And your family's from Midland, correct?
Yes, sir.
In fact, maybe your final comment on this would be the fact that I had Josh's mom as a student. That's how old I am.
That's pretty funny. You got any other points you want to make about the McNair family?
Just probably the greatest lesson that I've learned from reading about Bob McNair and the McNair story was that even if you don't come from money, you can work hard and use capitalism and the American dream to be successful. You don't have to start rich in the beginning. And also that, Mr. McNair said, if you get knocked down, get back up, never give up. And you can find this whole McNair story on the Northwood website, actually, the McNair Center Entrepreneur of the Month page. And so you can see the whole story.
Okay. Tim, you got any last comments you want to make? You got about a minute.
Ralph, I just wanted to say thanks to you for being part of the show. And literally, it was the two of us that started the Outlook many years ago.
Many years ago.
And the McNair Center is just so grateful to have you here with us today. We look forward to many future broadcasts. And again, I would just say that The monthly economic outlook is going to be available, and you're going to wrap that up. But just a special thanks to you for being part of the origins of the monthly outlook, and for all those years giving it credibility through the Midland Daily News and the Hearst newspapers.
Thank you. Well, ladies and gentlemen, this is our inaugural program. We hope you enjoyed it and that you will tune in again next month and bring a friend or two with you. If you desire to receive the McNair Center Monthly Economic Outlook by email, please send an email request along with your comments on this program to mcnair@northwood.edu. That's mcnair@northwood.edu. See you next month.